In this video, we teach how to use the key information of a stock's institutional ownership when stock trading. Hi, I'm Mike Bellafiore, co-founder of SMB Capital, and we're a proprietary trading firm located in Midtown Manhattan. And I'm also the author of the trading classic, One Good Trade, and the Playbook. In this video, we share 3 effective trading patterns to use after researching a stock's institutional ownership. All right, so we got a question from one of the traders in our community who asked how we think about the importance of institutional ownership. And so Max was kind enough to put together some thoughts as to how we use it, why it's important, how we find it. So let's talk about that.
Absolutely. Okay. So overall first, what is institutional ownership? This basically measures the amount of available stock in a firm that is owned by large financial institutions such as hedge funds, mutual funds, and pension funds. So basically this is where most of the money is in the market. And this could also be an indicator as to the level of smart money versus dumb money, which is usually considered to be retail money.
So what you mean by that is most of the money that is being traded or invested is owned by these hedge funds, mutual funds, pension funds, institutional traders.
Exactly.
And we're tracking that because we think they've got a lot of resources, they're smart, and they know better than their competitors what's going on with a particular company.
Exactly. And there's also just overall a lot of resources for them to drive the stock in a particular direction. So just like going over the impact of this ownership. Because of their buying power, there could be multi-day or week trends that could develop because of the amount of size that they are going to be putting on. And there could be clear signs of this participation when a stock is showing relative strength or weakness to the overall market, especially on high R-vol. So usually, like for example, if you were to track a particular market stock versus SPY, the S&P 500, and there was strong R-vol, most likely there is going to be some big buyer out there who has enough resources to by itself drive the stock in that direction. And then besides that, just kind of seeing if there is a accumulation or distribution of a stock could kind of give you a bigger picture idea as to where the smart money believes that that this stock will be going in the longer term, and then this could help you try and find setups that would be following this trend on the intraday time frame.
All right, and so before we're starting each trading session, if we're thinking about trading a stock, we say there's certain data you need to know about a stock. What's the short interest? Where are the long-term support and resistance levels? How much volume is done in the stock per day? What's the news in the day? What's the big picture idea for the stock? But also, we want to know, while we're trading it, what's the R-vol? But also we want to know what's the institutional ownership of this particular name, because it can affect how it will stock. Something with a high institutional ownership will trade potentially differently than something with a low institutional ownership or a mediocre institutional ownership. So that's one data point that you guys are looking up that we're using as a firm, and we want to know before the open when we're thinking about trading a stock.
Exactly. So just kind of going through a few basic trading strategies that I've noticed that could be very useful. First is
quick question, and I promise not to interrupt. Well, I will interrupt again, but at least for a couple minutes. Where do you go to look up institutional ownership?
So I personally use finviz.com. Okay. And it's very clearly on there. You just type in the symbol, you scroll down, you can see ownership, like short float, all that kind of stuff. So just now, a few basic trading strategies. First, I'd like to just like filter out for stocks with high RVOL. This will tell me that this stock is in play for the day, and this could also be leading to a larger move. If the RVOL is not present, then it's possible that either the institutions are not going to be active in this day, or just, overall the potential move is not going to be as great. So for an actual trading strategy, I like to use a VWAP trading strategy, and the reason why is because if, let's say, a institution is trying to accumulate stock, they're going to try to accumulate it as close to a VWAP as possible. So you should see on the long side quick spikes off of VWAP and a very quick push away from price. And then this will tell you that there's a big firm that is active in buying the stock, because especially when they are sending out the orders to a market maker, they are going to be paid, being the market maker, on how close it was their average price to VWAP. So they should be quite aggressive when price will come back down to a VWAP for the long side, or if it was a short trade, then shorting back into VWAP. And besides, this can give you a very good risk-reward entry, because if, let's say, from the long side, you were going to buy the bounce and then it leaks through VWAP on strong volume, then you would stop out. But if, let's say, there is going to be that big breakout, being able to add in size with a relatively low risk could then give you a good price to actually trade for that bigger picture idea. And then also it will just kind of the second trading strategy is that it can illustrate just the overall market sentiment. So for example, if you see a very big institutional buy setup in Apple or in these big market stocks, it could be telling you that overall big players are trying to buy up the market. And then if, let's say, you've found setups in other stocks, then this could kind of serve as more confirmation for your long bias, or if you want just to trade overall SPY as well. So now just kind of some examples. Just kind of the first one being Chipotle. Ownership is 99.5%. So this means that most of the shares outstanding are being held by big institutions. Visa is similar, and Google. I put on Slack here as well because of the short float. So just because there's a strong institutional ownership, it doesn't mean that they're all long. So for example, of this 84%, probably a good portion of this 17% short is by institutions. And that's why sometimes you can also see the ownership over 100% because of the short float. But kind of just seeing this combination should tell you that big, hedge funds, mutual funds are probably short this name. And if you were trying to trade this, this would be one on your watch list for possible short squeezes, and there's kind of things like that as well. So now I'm just going to go through 3 different examples of when institutional ownership came into play for me in just past trades.
If you want to learn 3 real-world setups that our traders use, including the simple setup that we teach all of our new traders, and the setup that turned one of our traders into a 7-figure big money earner, check out the free webinar that we're currently running. Just go ahead and click the link that should be appearing right now at the top right-hand corner of your screen. That's going to open up this free registration page in the new window, so don't worry, you're not going to lose this video. You're going to learn more in a couple of hours from this trading workshop than from years of online education.
So the first one was a few months ago. The stock was AMAT, which is Applied Material. Overall, as you can see, it's just a very strong uptrend. Institutional ownership is at 83%. So we see here on the open, it's kind of just trending up, and then just right at the open, a big buy. Right? So we go from around 60.20 all the way up to around 61.60. And for this stock, that's a pretty good move. And then you see that once this stock kind of came back down into VWAP, there were very quick spikes back up, and then this stock ended up trending past this high for the next hour. So if you were gonna, try to enter this trade, seeing how the stock was bouncing at VWAP should serve to you as confirmation, as well as the fact that there was a very strong opening drive, that there are big institutional buyers coming into this stock. And because this was the day after earnings, the RVOL was quite elevated as well. And there was the fundamental news catalyst to actually justify this having a relatively large breakout.
So by strong opening drive, we mean a nice move in terms of price to the upside.
And volume as well to the upside.
And elevated volume when we're actually going to the upside as well for this particular name. And then we want to sort of see a shallow pull in and hold above VWAP for a good entry.
Yes, exactly. And ideally, like, you would see a pullback back to VWAP on smaller volume than the up moves, as that would serve as just one more check in your favor for the or for this pattern to set up. So now just kind of the second pattern. This was just more so a technical setup, so there wasn't really that much of a news catalyst, but if you recall, I believe that this was like last month where Netflix was in a very tight range. There was almost like no price movements, and you can kind of see just kind of there's like levels where Netflix was stalling. And then, you know, the ownership here is 83%. And then on this day, which we'll zoom into here, we see a very strong opening drive, which is a change in fundamentals for this stock, because just like, you know, over the last few days, the stock was barely moving $3-4 intraday, and suddenly we get a $5 or $6 move in the first like 30 minutes. Obviously, there is someone out there that wants to buy this stock up. So for like the first check would be like the strong opening drive, then there would be the pull into VWAP, and then like, you see that that once it actually like pulled back in, there was that strong green bar, and for you that could be your confirmation that there is that buyer out there, and then like your stop would like basically be below VWAP, and then as you can see, that was a $1 stop, and the trend doesn't really end, you know, until you make a lower high, you know, around like 314. So really, the you know, that's a 4-to-1 risk reward trade right there, and like you also broke out, you know, prior resistance points with like volume as well. So just multiple checks in your favor, and like the filter was definitely the RVOL in a you know, highly owned stock.
Just to sort of supplement what you're saying, and I think there's some people watching that do not have your market knowledge, so we'll help them out a little bit. So yeah, I mean, so you have this high institutional ownership. Those tend to be players that are not trading on our time frame. We're short-term active traders. We are looking for news catalysts and technical catalysts. We're playing our game. They're playing a different game. They may be longer-term investors, they may be longer-term traders, but they are investing large amounts of money. And because they're investing large amounts of money, they are making much fewer decisions. They are going to be in something for a longer time period. They are going to be more interested in what the overall story is for the particular name. And that's how they're playing the stock. So something really different has to change for a stock that's trending up and doing well, for an institutional owner to decide, hey, I'm getting ready to get out of this position or lighten up in this position. They're not just looking at a resistance level that they're seeing intraday and saying, oh, well, there's resistance here, I should lighten up, like maybe we would do. You know, they're not looking at a 5-minute chart and a 15-minute chart and saying, oh, there's an overextension here, I should lighten up. Or there's a breakdown on my moving average for the first time, or there's 2 moving averages that have crossed and now the stock is below it, so let me get out of it. That's not what they're doing. They're making big decisions with big money on longer time frames. And so, and that can kind of cut both ways, right? Which is when they decide it's time to lighten up or get out, they leave footprints, we can see that, and they can't get their selling done, their lightening up done, generally within 1 day. Or they want more exposure to a particular name, they can't get that done in 1 day or 2 days, and they're not just buying it for it to go. I mean, you remember all the scuttle about, is this going to go to 420? Yeah. Which is laughable when we see where it is today, right? You know, and people are like, well, it's a short squeeze, and no, it was institutional buyers who believe in the name, who were buying it up and thought the stock could go much, much higher, and it did. And it did. And so when you have that elevated volume and you have high institutional ownership and you see something break out like we saw with Tesla, you know, that's not what's going on there. All right, so those are things that are important.
I was just going to add that something it's worthwhile understanding when you have a stock, like I'll use an example of Apple, which I don't know the weight in the Russell 1000 index right now, but I'll suspect it's 6 to 7%. It's a huge market cap, and it's very difficult for a institutional diverse portfolio to have 6 or 7% of their portfolio in a single stock. And when Apple is leading the market higher like that, and that portfolio manager is arguably underweight and getting measured relative to that index, every day that Apple's up, they're underperforming purely on the basis of that stock. So it creates kind of a chasing function where they will be buying it up, buying it up, buying it up, just trying to keep up with it. And the opposite can be true too. I suspect that's what happened with Tesla. Everyone was bearish on Tesla. No one wanted to own it. All of a sudden, it's a $100 billion market cap company, and you're getting measured relative to an index. You have not a passive, but a mutual fund, an active mutual fund that doesn't have a fundamental perspective on Tesla, but they're underperforming every day because the stock's going, so they have to get in and buy it. So that's another way that institutional ownership can really impact the activity of a stock.
So then for the final example, this was actually just like last week. We saw a very similar setup as well, 80% institutional ownership, breakout on the daily chart as well. So, you know, overall like setting up nicely for that breakout move. So we see, so we see on the open that there was a strong opening drive, a very, just like a tight flag pattern. So like the volume basically died down from that opening drive play. So this is kind of telling you that there's like not that many sellers here. And then once like the price broke from 94, it was on very strong volume. So that means that the buyers are probably back in this name. And what you can actually see is that once like this stock broke 94, it actually skipped prices. So it went from like 94.05 to I think 94.20 in around 1 second. So obviously there are big buyers out there that are just hitting the offers. So just kind of like seeing like these patterns, and being able to accumulate in, a tight setup or on the breakout, and just, being able to like recognize that there is one or two or like multiple big buyers out there could just kind of add multiple points of a confirmation. And for this overall like market, the odds are is that when like the SPYs do actually fail, it's probably going to be a similar pattern. Like you're probably going to see a 1% like down move within the first 30-40 minutes, and then it's going to come back up to a VWAP. And if it fails, like that's a sign that big institutions are probably going to start selling off their market stocks, and that this could be the start of something more. And to me, until that kind of happens, I'm still going to be in the mindset that either we're going to be like range bound or just like grinding higher. Because as you see, when the big institutions actually do follow through, the moves are quite powerful and the risk reward entries are quite favorable.
Now it's your turn. Will you use a stock's institutional ownership in your trading after watching this video? And if so, how will you use it? Let us know by leaving a comment below right now.